First of all, thanks everyone for joining. So it's the August edition of our landlord meetup. So you might recognise Kate. Kate's been with us for the last few of these, which is great. So thanks again for joining. It's just Kate and I today. So I'll just do some welcomes. I'll just talk you through what we're seeing at Habito, both from the brokerage and the lending markets. And then I'll pass over to Kate. So Kate's going to take you through where next for lettings. And then afterwards, we'll have some time just for some Q&A. So for you guys just to ask questions to both Kate and myself. There's a poll at the top, so you should see on your Zoom, there's a Q&A section. So please, as we go through, type your questions into those and we'll coordinate those and ask them at the end of Kate's session. Great. So what are we seeing at Habito? So I guess relatively uniquely at Habito, we get a view of both the brokerage market and the lending market. So we have a bit of oversight over the whole mortgage market. From the brokerage side, we're seeing activity return pretty much back to normal. So in terms of where we were pre and post COVID, we're pretty much at the levels that we expected to be. So much of the activity has started to re-happen in the market, and that's across the whole kind of value chain for customers. So house viewings are taking place from the earliest part, and then we're seeing lots of people coming in for advice, and obviously products are starting to come back into the market, particularly at the higher loan to value sort of space. So in the owner occupied space, we're sort of at 85% loan to value. The odd 90% product is starting to come in, and on the buy to let space, we're starting to see exposure towards kind of 80% loan to value, which is great for those of you that have some cash to deploy and want to do it as efficiently as possible. In terms of the lending space, much the same story. So just as a function of the housing market restarting again, we're seeing more customers come in to transact on houses, both from refinance and for purchase. And obviously they need products to transact on. And so we're seeing that too from the lending side. From our point of view, that started to pick up again back towards where we were before COVID. So that was all I was going to share with you, just a very brief overview of what we see from what's happening in the mortgage market. So if there's anything that you are more interested in or wanted some more specific information, please, as I say, put something in the Q&A and we can cover that off later on. But for now, I'll pass to Kate. So Kate, where next for letting?
Well, that's a $1 million question at this moment in time. So Ben's kind of going to look after the slides for us. So if you want to move on to the next one. Basically, this is what I'm going to cover. So we've been doing a lot of work on reviewing prices and rents since we chatted last time at the last event. So I'm going to share that with you. I thought then what might be quite useful is to just run through some thoughts on all the different types of the rental market. So I'm going to talk you through short-term let market, what I think is happening in student, professional market, and also benefits market, because that's quite interesting at the moment. And then cover sort of, well, what sort of things do you need to be doing over the coming sort of 6 months, a year to prepare yourself for what might come our way. So if we can just pop on to the next one. This is basically every month I produce a property price report, and every quarter we produce a rental report, and they're based on all of the price reports that are out there and all of the decent rental reports that we can find. So when we were sort of presenting July time on data that was coming out sort of April, May, June, there was all doom and gloom, and the papers were saying whatever they could. So my kind of memory of the one of the titles was the BBC saying house prices fall for the first time in 8 years. Astonishingly, much as I like the BBC loads, that was based on a 0.1% fall year on year, which is hardly headline material in my view. However, much different over the last month when we started to get some real data of what had actually happened when the market started opening up. So I was on, those of you that are watching BBC Tuesday morning, they were talking about a mini boom. I'll put that into some context, because yes, it is compared to what we were expecting. It's definitely a mini boom, but it's not exactly prices. Oh, you got the next one here. Prices soar. Well, They're definitely going up in the main, but I think there's been a little overuse of adjectives to describe things. But there is absolutely no doubt whatsoever that every single price information, as well as information that we've got on the ground, is telling us that the market is moving upwards, which nobody could have kind of predicted. And if we have a look at the next one, I think there's a lot of data on this one, Ben. So if we just let that zoom in. So what I'm going to do is I'll walk you through, I'll go from the bottom up actually, because I know there's quite a lot of people from London. So this data is basically from the Land Registry. And this is government data that tracks what's actually happened, as opposed to some of the things like Nationwide and Halifax just cover mortgage data. So they don't cover huge amounts, but the Land Registry does. They stopped reporting data for some time, and we've just had the first data out from them now, which is what we're reporting. So in London, they're saying here, the first column tells you average house price is around 480,000. They're saying that they're 61% higher than they were back at the height of the last crash, so clearly a big increase. We're saying that, and I thought I'd just throw these figures in because we know we're heading into a recession. We're just not sure how that's going to affect the property market, and to be honest, we're not expecting it to be as harsh as the last recession that we had, which basically it took, so prices fell for just over a year and a quarter. That's how long they fell for back in the last recession, and they took about 3 years to recover. So that would suggest that if you are buying now and you're erring on the side of caution, as long as you're looking to hold a property for 5 or more years, even if prices go down, hopefully they should have recovered within that time. If we go up to right to the very top on this, you can see Belfast. Astonishingly, they've had such a, everybody talks about the price bubble bursting and when's it going to happen? Well, it's happened in Belfast. So their prices are still 37% lower. And don't forget, this isn't including inflation or anything, than they were back in 2007. So they've really not recovered. Some properties will, but a lot haven't. And prices, they took about 5.5 years to fall. So they're falling sort of up and down for about 5.5 years, and they still haven't recovered. And we look at sort of halfway down, if we take Nottingham, where I'm from, you can see we've had a kind of mid-range recovery, 29% increase. And for us, it took a couple of 2 to 3 years, much as in sort of other places, and about 6.5 years to recover. So overall, in Nottingham versus London, if you're looking to buy now, you're going to be fairly sure of holding it for 10 years. And of course, if you're into buy-to-let, these kind of pale into insignificance because you'd expect to hold a property probably for a good sort of 20, 25 years. Those days of making money out of buy-to-let in a 5-year period probably not likely to work too well over the next few years. And then the column you've got next to that, I am suspicious, I'm going to highlight, I'm suspicious of some of these figures, so I wouldn't take them too literally. So it's looking at, if we go back down to London, they're saying that prices in London during the sort of April time were about 2% up year on year. Reason I'm suspicious is there is no way that Cambridge saw a 19% increase in house prices. There's something not quite right with the data there. But actually anything that's between 3 or 4% is probably not far off. And we can see when they talk about these mini booms, if you like, that we're having, those increases aren't that much different to the column on the right. And what that basically says is if you take the average house price today, run it back to 2005, on average in London, you'd see a 5% increase, and we're only seeing a 2% increase this year. A bit more on a pie, looking at Oxford, typically see a 4% increase, and they're looking at slightly higher, so 4.6. So those seem to be sort of real figures. But the big thing that all of this shows you is each of these towns and cities that we've got here is what a dramatic difference there is by each area. And it also says, because this data is April data, we're not really going to get data on today's market for another 3 or 4 months yet. So we won't really know till sort of September or October time, to be honest, how the market's performed over the summer from this sort of set data that we have here. But the good news is that in the main, all of those figures in the blue column are showing that house prices tend to be rising, apart from a few places. So I wouldn't put huge amounts of store by them, but definitely what we're hearing is a good 2 or 3% up, maybe a little bit more. So if you click onto the next one, Ben. So rental side, these are all the reports that we've looked at. I actually produced the Belvoir Lettings Index myself. So we've been running that index since 2007. The average data is pretty good. We've tracked that against the Office of National Statistics. People like Home Tracker also do a good report. And more importantly, if you've got particular areas that you want to look at, if the Belvoir office has responded, we've actually said exactly what's happened in Bedford, for example, or in Uxbridge always responds. So you can have a little look at that. We're tracking a little bit of a decrease, but that's not a surprise during COVID. So when the market was closed down. Rightmove, a little bit further ahead, so looking at the kind of asking rents market, and they're definitely seeing sort of record rents outside London. But where there is, for those of you in London, we are expecting a bit of a fall, and I'll explain why that's heading our way in the market. But certainly outside of the areas, the market is looking really, really good. And again, you'd expect rents to be as flat as a pancake, considering they tend to react to people's wages. And of course, we're in this weird world where some people are doing very well wage-wise, whereas other people have literally lost their living. So tricky to see, if you like, how rents are going to perform, but we're not expecting big increases this year. Not that rents ever do a big increase, but London looks like it's going to suffer more from rent falls, and that's because of other stock that I'll talk to you about coming on the market. So and on to the next one. So this is I've done this separately. So ONS, this is probably, it's a bit like land registry, slight of out of date data. But having said that, because this is running all the way back to June, it probably it covers about 500,000 plus properties. So it's pretty robust. Data comes directly from letting agents, etc. So you can see here that areas like Yorkshire, Humber, East Midlands and West Midlands, Southwest doing really well. But they often talk about sort of rents being skyrocketing and extortionate. And if you've got anybody that keeps telling you that, particularly your MP, do always send them the ONS data, because on average, the ONS, which is government data in itself, shows that rents rise on average around 2% a year, sometimes a little bit more, and sometimes, as you can see here, a little bit less. But overall, pretty positive picture, both from the price and the rental perspective. So moving on from looking at some of the stats, what I thought might be useful is, as I mentioned earlier, was, well, what is the future? So if you were thinking of going into short-term lets before COVID, or if you were into short-term lets at the time, how is that market going to pan out? And certainly, I thought this was a great quote from Airbnb. They were actually very transparent with their data, which I was quite surprised at. But the chap who heads it up says basically it's never going to come back to the level that it was. Now, you can see the impact it had on their business, and I think they were looking to float at the time, but obviously that wasn't on the cards. So they'd lost something like 80%, I think, of their bookings. They were, I have to say, very good at refunding people, and I think that's probably brand-wise done them quite a lot of good in the future and remained a level of trust. But even though they had all those falls at the time, it's very clear, and just from general talking to people, people are still very keen to go away, even if they can't go abroad. So quite a few people that I've been talking to have been using short lets, and a lot of people have been going away for two lots of 2 or 3 nights. That seems to be quite popular. And we reckon, as a result of all of that, and from all the sort of stuff, articles and feedback and everything, it could be a couple of years or maybe a little bit more to see this market recovering. So that's sort of where we are, sort of short term. If you could move on to the next one, Ben.
Yep. Yeah.
Studentlex is really interesting, because I have to say, I thought this market was in for real trouble. But of course, one of the key things is unlike, say, on the professional side, which we'll talk about in a minute, financially students weren't affected because their grants were still being paid. But if you're one of the student landlords, there were a lot of people put under a lot of pressure to say that they shouldn't be paying their rent if they're not living somewhere. And I think what we have to understand is really a lot of the government initiatives were to try and help people make sure, like the furlough scheme, for example, that people could continue paying the rent that they should do, so that as much economic activity could go on as possible. It didn't help then that some large student landlords started to return fees for those that didn't stay, such as Unite. That was very much led by Unite, one of the big organisations, and then that put even more pressure onto student landlords. But I think quite a lot of people continued to pay and sort of understood that it's what they had to do. And it certainly helped the NRLA, sometimes who is unfortunately accused of not helping landlords. They do a massive amount politically to help landlords, and that shouldn't be underestimated. And they did get the government and university organisations to back a call out for students, because they were still getting their money, to continue to pay. And I do think that's perhaps helped once the initial sort of upset and rouse and everything was starting. If we go on to the next one, I thought this was the best way to really describe what happened. And I kind of read this and thought, you know what, this isn't me being lazy, but I was really astonished to, somebody had posted on Facebook, what's everybody's thoughts on students returning to university and rental accommodation? And everybody was pretty buoyant about it. And what appears to have happened is students have gone home sort of March time, and basically they've had enough. And quite a few of them appear to want to get back to their student life. And there's been a lot of really interesting stories around people kind of, you know, sometimes with COVID, I think it's made us realise what we've lost, and the things that we do enjoy in life, and actually on the opposite, things that we don't enjoy doing, that we're kind of thinking, why on earth was I doing all of those commutes every single day? Why don't I just do it 2 or 3 days a week? And the student thing, what has come back from that is that a lot of people have been saying they've realised that the student experience is not just, and the learnings that you have, it's not just about the academic teaching. A lot of it is going out, living with different people, strangers you've never met before, and learning to be independent from parents. And I know about you, I have some fantastic stories of kids ringing up parents going, I've run out of milk, what do I do now? Or the milk's off, what am I supposed to do? And sort of parents on the other end politely trying to say to their kid, well, you have to go out to the shop and buy another bottle. And that is a God's on it, that is a true story from last September. My other favourite one was this girl who rang a landlord. He does a lot of student lets. She rang him up in an absolute panic. You've got to help me. And he's going, oh my God, what's happened? What's happened? And she said, well, it's my toaster, it doesn't work. And I have to have my toast. I can't possibly go to one of my student meetings without my toast. And he went, but I didn't supply the toaster. And she said, well, but you're my landlord, you must sort it out. And he said, don't ask me why. He said, but somehow I was. The next thing I knew there, I was at my house. And I plugged it in for her. And it is that, those are kind of quite important life lessons if you think about it. So I know there's a lot more than that about getting on with other people and sort of finding your independence. And that really, really seems to have hit home. And that's why a lot of people, I think, unexpectedly, and certainly for me, I thought it was going to be a bit of a tough time on the student side. Unless you're telling me any different, a lot more are coming back. The universities, if we go on to the next slide, that are maybe going to be sort of suffering that a little bit more. The CEBR have done a really, really good update, and the Institute of Fiscal Studies. So the view is that there will be a short-term hit on some of the student area, and the hardest place that probably will be hit on those, and we'll see another chart in a minute, on the international students, because obviously they're going to find it difficult to come, or worried about quarantine, etc. I think if you're going to take a hit, it's going to be about 12 months. The good news is, though, certainly from research that's been done with international students, UK is still seen as one of the best places to learn, and the best places to come to university and have an enjoyable life as well, have that lifestyle and academic learning mix, if you like. And the other thing that I picked up is that a lot of the plans to build more student accommodation have actually been put on hold. So it may well be, as individual landlords, that you might do better, if you like, even than the bespoke accommodation, because not as much of the new build. And you'd have to check on each of your areas, so the particular university you're at. But it is very much suggesting that they put a halt to quite a lot of the construction, and that may mean, therefore, that you benefit from that during this sort of next 12 months and can kind of slide into when hopefully things get better and we get all the students, international students and everybody else back, that you won't see too much of a lull. Institute of Fiscal Studies saying that UK students, they're having offers held for them. This was because of the kind of educational, I don't know whether it was fuss or disaster, to be honest, but they are going to hold offers over for people that originally had them if they didn't make their grades. And they estimate that after all the shenanigans been going on, that's an extra 500 students. Well, that's actually quite a lot, that's just from 2 universities. So there is the other thought that actually there will be more students going to university, whether they go this year or have a deferral for next year. So there's definitely, this market will hopefully, and I hope you're experiencing the same, will do a lot better than certainly I first thought. And if we pop onto the next slide, Ben. The ones that I thought would just be useful, I just sort of picked this slide. These are the universities that have got the highest level of international students. And obviously it's really important that we learn lessons now and into the future. We know that this probably isn't going to be the only pandemic that happens. Goodness knows, let's hope we've learned enough to make sure that we shut places down much, much earlier. But as you can see, a lot of the ones that have the international markets, very, very big in places like London, of course. But there are a sort of range of other universities. Who knew? I mean, hopefully they'll get lots more of people applying at the Liverpool School of Tropical Medicine, because boy, do we need all the help we can get at this moment in time. So you can, I just thought this might be useful if your kind of university or your area kind of pings up on here. But I think it's mostly affect the London area. And the good news with London, of course, is that demand and supply, there's typically always going to be more higher demand than there is on a supply basis. So a much better outlook for the universities than I'd first thought, and I hope that's kind of working for you as well. Do let me know if not. So the next bunch, let's have a little look at professional lets. This is your standard let to those people working in the city or working outside in towns and rural areas. There is no doubt that actually, more than COVID, I think the biggest threat really at this moment in time is either government policy or lack of government policy, if I'm very honest. And I say this from a position of somebody that is trying very, very hard to make the PRS a better place for tenants, but also make it a reasonable place for landlords and letting agents to operate in. And at the last webinar, which is worth seeing if you didn't see it before, we did a special on evictions, on how they were going to be changing. And yet here we are. So there's due to be a change in the courts, with the courts opening on Monday, yesterday. And that meant that the first cases could come through. Probably for the first 4 to 6 weeks, all the cases that were going to be heard, because there's such a sort of 5-month backlog, were going to be ones that were actually predated COVID, nothing to do with COVID in the first place. And now that suddenly on Friday, that all got cancelled. And it got put back, so not looking at opening the courts until end of September, start of October. Now they're talking about potentially not allowing you to evict a tenant for the next 6 months. It's not actually in place yet, but we're waiting to see what happens. And the idea that basically landlords have to provide free accommodation for people, which even social housing doesn't do. Housing associations and councils charge people. And they also have been sending out eviction notices during this period of time. And you have people that are causing disturbance in the property, etc. It's a bit like, well, why don't we just say to all those tenants that aren't paying you rent, do you know what? Government giving you carte blanche. I am on a hobby horse now. Pop into Sainsbury's and just take what you like because it's fine. Don't bother paying your utility bills. not a problem if you've suffered, and it is rough that people have suffered, but at the end of the day, they are being given money through universal credit and other means to pay you guys. And I don't see why you should be singled out, which is what's happening, as the only organisation, the only sector that has to provide everything for free. That hasn't happened. Even the mortgage lenders aren't providing anything for free. They're giving people holidays, as they're called. But at the end of the day, you know, as Habito have been very transparent with this from the start, and one of the most transparent, I think, turn around and say, well, look, you will be paying more. And we made that very clear, and they were very good at doing that at the start. So that is holding back, and the private rented sector hasn't really moved in the last couple of years, despite the fact that demand for it has gone up. The kind of other thing that I don't think the government spotted yet or cottoned onto is that we are moving into recession. They've spent the last sort of 5 years, since 2013, really pushing for the growth in first-time buyers. And that is likely, although it's happening at this moment in time, that's likely to stall come January. And the last time we had the recession, we started that recession with 13% of people, households renting, and it went up to 20%. It wasn't sort of greedy landlords crowding out first-time buyers that caused that. It was because everybody else dropped out of the market and wanted to rent because it was safer and felt was more convenient, if you like, than buying a property. So I don't think their idea of holding back the private rented sector because they want more people to own and then penalising the private rented sector and sort of carving them out as the people that have to pay. I just don't think this is sustainable. So we are, just so to be reassured, we are doing everything as we can as an industry to say this is unfair. One of the things we've been calling for example, is tenant loans. They've been introduced in Wales, and we're trying very hard to get them to produce in England. And that's only the fair thing that the government should do, is basically the tenant can apply to a loan to basically keep the roof over their head. So we are busting the gut basically to try and do that. As far as what's actually happening, this is where we're seeing, you can see these reports that you've got underneath. London is definitely seeing a fall in rents. And one of the major drivers behind this is the short let market. Because so many people can't let on a short-term basis, we're seeing quite a dramatic amount of stock coming onto the professional let market, and that therefore demand and supply is matching more, and as a result we're seeing rents being offered more keenly to try and attract people. So I don't think that'll sort of go on for much longer. It'll be a bit of a hit. It'll work its way through the system maybe until middle of next year. So you may, if you are struggling, what I would say is it's very easy to try and say, well, I'll hang out for an extra few £100 or whatever. It's much better to get a property let, as long as, and you must make sure, that person can really continue to pay the rent moving forward. Because if this 6-month moratorium comes in, then you might have to, as some people have had to already, well, some people have been letting properties for 12 months now to tenants that haven't paid them for that period of time. So make sure you look at your insurance, make sure you look at that, and try as hard as you can to make sure you've got a really good tenant in there that's got a good job, such as in retail, such as in hospitals, police, etc. Those jobs that are definitely going to survive over the next 6 months. You want to make sure you get a tenant that's always going to be able to pay. So that's the first one, professional lets. I think we've got another one. These are the forecasts that we have from Savills to give you a little bit of an idea about where you might look for. Not great in central London, and again, that's the international hit from the people not coming here from abroad. That's the big market in the central London. So they're looking at rents potentially falling by up to 20% there. Don't worry huge amounts about that. You've had some fantastic capital growth if you've owned those properties for a little while. And then we're talking about, this is mostly in the prime market, by the way, sort of, which can be quite volatile, more than other places, sort of 2 to 3%. So moving forward, depending on which of the areas you're in. So be braced for that. It's better to, I'd rather give you this news now so you know it's coming, and you look to see where you can make a little saving, or maybe offer a little bit more keenly so you capture a tenant that another landlord doesn't. So not great, but do you know what? This is the world we live in. Sometimes you get some great increases, and sometimes we have to live with things not always doing so well. But interestingly, the further out you are, the less the pain is, and you might even see some annual growth coming forward, albeit a little bit. So moving on to the next slide. What is the future? Well, as I said before, pretty good, actually, I would have thought, over the next few years. Recessions very much drive people to the rental market. We know that 95% mortgages haven't come back, so they're not huge now for first-time buyers because they're getting these sort of bigger deposits, and some are certainly saving very hard at the moment. But the one thing I would say that we are seeing, and this particularly sort of came through in the Belvoir index and the feedback that we had, definitely houses are much easier to rent, particularly outside of London as well, than flats are. But even in London, some of the houses are going for more money than they have before. You've obviously seen the falls that are there, but that doesn't mean it's applicable to every single property. We're expecting relatively flat rent for flats, to coin a phrase, and a lot of that is, again, it's the supply and demand match is much better in the flat market. And I would brace yourself for some possible falls on the HMO side, and just try and get that, make sure those vacancy rates are at the smallest you can. Really look after those tenants, because I think they're going to have a bit more choice. It's a market where a lot of people have come into to try and aim to get better income rates than you could from a professional let, so for a house or just a flat. So just be braced for that, and be aware that that might happen. There is a huge risk of tenants defaulting post-furlough if they don't, if unfortunately they're let go. So have a plan. If you've got people in there and they're in the hospitality catering industry, and I'm just using them as an example, then you need to talk to them. My suggestion, with the way that it's getting much tougher, as I mentioned there, to evict tenants, is basically try and go down the mediation route as much as you can, because that will be much easier than not getting paid for 6 months and waiting for being able to sort of go to the courts. As I say, there's two different schemes. So Scotland have done a loan scheme for landlords, and Wales have done a loan scheme for tenants. So we're very much asking, no surprises, for the loan scheme that for tenants that Wales have rightly introduced. And they did it so much better than us, because they did that at the same time as introducing that it's going to take you 6 months to evict a tenant. So they were very much fair to both sides. And to be honest, in England, that fairness definitely hasn't reached your doors yet. So sorry if that's sort of making life a bit difficult. And on to the next one. So the benefits market, normally not something that everybody's overly keen on. It's huge. So I put this slide up last time. This is basically the 3 scenarios that we're expecting for unemployment. So at the moment, we'll be hovering around 4. In some places, that's 3%. In some places, it goes up to 6. So have a little look at that area, that for your area. But they're looking at, even in a best case scenario, about 10%. And that's much, much higher than the last recession. And the possible rate of it even moving up to 13%. So again, if you've got tenants on furlough, whether they tell you they may lose their job or not, get prepared. Make sure that if anything happens to them, you can transfer them over to universal credit as best you can. If you're looking at taking people on and you've avoided this market before, of course you can't discriminate against them, but for example, if there's been an affordability issue, it may well be worth having this as a backup plan. Universal credit and benefits tenants have been given £1,000 extra in money, wage basically, or salary, and they've also, which one of the things they were very naughtily squeezing the private rented sector, they've actually moved the local housing allowance, which they'd frozen over the last 4 years, up in line with inflation. And in some areas of Kent, that means people are getting, tenants since April have been getting 250 quid extra a month when it kicks in on their tenancy agreement. So if this isn't a market you've looked at before, you need to prepare for your current professional tenant moving into, becoming on benefits, and you also need to look at making sure that, where, if possible, you can at least make more consideration of this than you have in the past. because it's a market that, you know, with these levels of unemployment expected, that we've all got to consider. And at the end of the day, people need a roof over their head somehow. So we're going to have to support these people if we don't want lots of people out on the streets, which is not good for anybody. So heading forward, as I said there, you've got £1,000 increase, you've got this LHA squeeze rectified, and their rents, of course, aren't affected by furlough and the job losses. The downside is, which you have to be aware of, is that with the way the benefit system work, if they have any doubt about that tenant, they can and they do stop it instantly. There's a case recently I came across, and it was actually somebody had been doing something fraudulent using the tenant's identity, and it was nothing to do with her. And they just stopped the benefits. And fortunately, it was a good landlord and they sorted that out for them, but with a little bit of interference from a few others, but they did that. You do tend to get higher rental arrears, and that's partly the reason why the money is paid in arrears. And be aware that if that tenant hasn't told the Universal Credit team the whole truth, so for example, if they've got a certain amount of money and then they've decided to move somebody in, so a new partner or something, and haven't told them, there is a bit of a danger of clawback. So it is quite a specialist area. And of course, as I'm sure Ben would agree with, check your mortgage and insurance, because despite the fact that you're not allowed to discriminate against tenants, certainly the insurance company can, and they can charge you more for doing so as well. So, but definitely, if it's not a market you know, it's definitely one that as a landlord you should be getting to know a lot better, because there will be more people basically on universal credit. So in summary, we're probably looking at overall a sort of 2-year impact from COVID. Strong recommendation to review your letting strategy. Look at potential rent, look for what rent reductions you can or might be able to do. Be very aware that arrears and voids might go up over the next sort of 6 months, and make sure if that does happen, you have a plan B of how you're going to cope with that. Do keep up with lifestyle and work changes as well. So are there opportunities out there? Because the beauty in property is there's always ways to make money, even when things are going belly up. And you've got opportunities for office to resi, that's likely to come through. And in some areas, we may see a move out of London at some point. It might only be to the Home Counties, but it might be out as far as, you know, Wales, or I'm up here on the borders of Nottingham and Lincolnshire. And this could affect demand. As I say, London doesn't need to worry about that. Demand is always higher than supply, but you could see it in some other areas where it does have some impact. So I hope that was just some use, just looking at all the different areas of the rental market. And hopefully, Ben, we got a few questions.
Yeah, sure. So thanks very much. So an extremely comprehensive view, I guess, of the buy-to-let market, both for landlords, but also for tenants. And in fact, we've actually answered most of the questions as we've gone through. There was one around...
I didn't look, I didn't peek.
Yeah, exactly. there was one around student, how you expect to see the student rent market perform as we get back to lockdown. And from what you've said, certainly the gist that I got was that actually that sector seems more robust than some other sectors, whether that's because kids are sick of living with their parents or just they love living with their mates. I'm not too sure. There was one just, I guess, worth us revisiting around how landlords should view tenants on universal credit, given that it's often a bit more paperwork for landlords to deal with, and there might be more people moving into this sector going forward. But is there anything that you would reiterate just on that just now?
Yeah, there's a really good guy called Bill Irvine, I think, who knows this market like the back of his hand. So if you can certainly sign up to somebody like his Twitter account or anything, you really just have to. So the first thing I would understand is go and look out, because for the tenant, bear in mind if they're on furlough and then they're going to be told they're going to lose their job, and if they've got kids, and you know, they may well go into full panic mode, and why wouldn't you? And you can understand that. And I do think as landlords, you have a responsibility, but you also have an opportunity to help them at a very, very difficult time. And again, bearing in mind the eviction issues that we've got, helping your tenant must be number one priority. If you can keep them in the house and you can find a way that works for you financially, great. So as a landlord, I would double check whether you can, whether your mortgage allows you to rent to people on universal credit. And if it's an old agreement, it may well be that that mortgage lender has updated its terms and conditions. So maybe chat to a broker like Habito and just double check with them where you stand. So the first thing is make sure you can rent to somebody on universal credit. And we are told by Shelter that all lenders do this now pretty much. So there shouldn't be any issues there. The second thing is check your insurance, or see if you have to change your insurance in any way, shape or form. So get that done now so that you know that you're safe, and if your tenant moves to universal credit, that's fine. And then the third thing is understand what that tenant needs to do to get onto universal credit. To be fair to the team running that, obviously they had millions and millions of extra requests to go onto universal credit, and they did an amazing job. That's the one thing they did do, is they got people up on universal credit pretty fast, and that's been criticized very heavily for that in the past. So understand what the process is, make sure you've got the paperwork ready so that your tenants are basically front of the queue should things get difficult during November and December time, which is when it's likely to hit. So make sure you do that, and understand if they are eligible or not. And then moving forward, if you've got tenants coming in, just really think about how secure their job is, or think about having somebody in on universal credit, because at the end of the day, if they can afford it now, they should be able to afford it ongoing. So just really, really don't let it be a surprise to you and then panic and have to get all this stuff done. Get it all done before.
Yeah, and then one just to follow on from Rhiannon, just asking where's the best place in your view to start researching the benefits market more generally? Is that government material, or is that?
So do you know what? I'd probably, if it was me, I think I'd just go direct to the housing office. Mm-hmm. And just give them a call, because there's a lot. There's been some amazing stories actually of people of homelessness disappearing. And an amazing job of everybody, and it just shows what we can do if we all work together. There's so much politics, not just from the government, but also in between charities and all sorts of stuff and organisations about it, just in the homelessness sector. But everybody pulled together, and do you know what? When they did, we got everybody off the streets. And it was an amazing job. It's not been publicised how fantastic it is. And there's some fantastic stories coming out where, because people were forced off the streets effectively into some quite nice hotels and stuff, they've actually really got their life in order. And therefore, there's a lot of people out there that will be needing a new home for the first time. And there is a lot going on at the moment to try and make sure that the homelessness that existed before COVID doesn't come back. So the first port of call I would have is to either post something on a landlord Facebook site or something and say, look, is there any universal credit guys out there? Give us a hand and tell me what you think, because it's actually quite good. But then I would also have a chat with your local housing office and see what they have to say, and you might have to be registered a landlord or something like that. So but have a chat with them, because I should think they'd probably be quite grateful to hear from you.
Yeah, and you're absolutely right. I guess it is a chance, not just from a commercial perspective for landlords, but also it is an opportunity now to actually really help some people who actually need some help.
Yeah, absolutely.
That's great. There's a final one just from Kamal. So asking, I think, about a specific case around whether we can. There are lenders out there that would accept the combined income for a sole trader and employed over different periods. Now, I don't specifically know the answers to that. I suspect there are lenders that would take both of those incomes into account. What I would suggest is coming to Habito and just speaking to one of our mortgage experts about the specifics of that case. That they'll have access to the whole of the market. So please just go online, fill in a few details, and speak to one of the experts about that.
Yeah, that makes sense. And how are you finding the market at the moment, Ben? Are you kind of is the phone ringing off the hook? What's the level of interest mortgage wise?
No, it's great. So I guess we're fortunate in the position, I guess, that I was alluding to earlier. So we get a bit of an end-to-end view of the whole market, from the level of interest more holistically into house purchases and refinancing from people that are visiting our website, to the amount of those that are actually seeking advice and ready to transact. The good news is that we're very busy. We're seeing lots of people wanting to transact in their house. The drivers behind that, there's a few. So there's definitely a bit of pent up demand from people being in lockdown that have wanted to transact for a period of time. that now have the ability to do so. That's definitely one. Secondly, the stamp duty changes has definitely prompted some action, certainly for home movers, a bit less so for first-time buyers who were already receiving some relief in the first place. But certainly in the home mover space, that's definitely prompted a lot of activity. So yeah, as far as that concerned, it's great. We're super busy, but it's always good to see how long that will continue, and if we see any structural changes in how people are seeking advice for mortgages.
Yeah, and the buy-to-let rates, did you mention before they were getting a little, or not rates, the LTVs were a little bit more generous maybe, or heading that way perhaps?
There's a few things we can, in terms of rates, what we've actually seen generally in the market is for the more kind of mainstream residential products, rates have started to come down and have only now recently started to come out again, particularly at the higher loan to values. And then for the more specialist lending, so where people have a bit more adversity on credit or they're doing more complex cases, actually rates went up as a result of COVID. And then obviously loan to values are the kind of biggest influence to what's happening in the market and how much access certain customers have to mortgages. In the residential space, what previously before COVID you would have as low as a 5% deposit to finance your transaction, that on the whole is more like a 15% deposit today. There's a few coming back into 10% deposits. And on the buy-to-let space, there were certainly some products out there previously that had just a 20% deposit requirement that they pretty much disappeared as soon as COVID hit. And they've just started the sort of last week or two. There's a few lenders that have come back in offering those products, which is great. So there are obviously different challenges that get associated with that around affordability, and can we make sure that on the rental incomes that we're getting, landlords can afford to take the lower deposit products.
It all stacks up.
Yeah, but for those that have been sitting on some cash that they've wanted to deploy, let's say for a period of time, it now seems like a good opportunity to kind of start re-entering the market, especially with all of the context that you've just been through too.
Yeah, cool. Good.
So great. Yeah, Kate, thanks a lot. That was, as I said earlier, a super comprehensive view of what's going on in the market. So I hope everyone on the call found it as useful as I do. Thanks all for participating in the questions. We really appreciate that. We'll host another one of these next month. So I'm sure we'll be sending around the invite to that. So please feel free. We'll be going through some different topics next month. So enroll on that, and it would be great to hear from you again. And that's that for this month. So please stay safe, and we'll see you in a month's time.